Okay, so we all have any questions so far? So good. Do we have any question? Let me know if we do have any questions so that it can be addressed, right? And also, most importantly, right? What's it called now? What's it called now? Right. So by now, I hope that we are all on the same page. Oh, Iyanu, you are the call. Hi, Adeoluwa. Is it Adeoluwa? Thereabouts.
Yes, I'm here.
Ah, all right. So good for the call. Okay. Yes. So we are moving on gradually. Yes, to round off our model. So building a model is not hard. You know. Yes. And one thing that I can tell you is building a model. Pave way for you to make some good gigs. Hi, Bakis. Hey, Bakis, how are you? Hi, Bakis.
Good evening.
Yes, yes. Good to have you on the call, Bakis. Welcome. Thank you. All right. So building a model, can be stressful. At the same time, can also be fun. And also building a model, can also fetch you a whole lot of money. You know, when I say whole lot of money, I know what I am saying because a lot of money are in a model. You know, so but the thing is, you should not rely or you should not relax or you should not rest on your loins. Do you get, you know, one of our students in the School of Finance, which I taught, all right, so called me, that was day before yesterday, that she got a job to be the model for a client, right? And yeah, so that lady, she's still in our training, she's not done yet, but because of, have taught them model, you know, so, and she was like, oh, instructor, how much should I charge? So she asked me that, how much do I charge? I said, well, right now at the moment, I charge 1 million, right now for a model, so if I build a model for you, so I charge you 1 million. So and I said that, oh, I charge 1 million naira. But given that you are just starting up, I mean, you're starting out, so you can look into, plus or minus. And I said that when I began my journey, in model, so I was charging them 300K. So you can go for 300K. Yeah. I told her. Yeah. So I told her, some things that she should do, you know. Yeah, and this lady still works, so she still works, normal full time. Right. And yeah, guess what? The lady closed the deal, so eventually, right, she got the deal, you know. So and according to what she told me, so she'll be charging him 500K, right, for the model. So 500,000. And she said that the man should pay 300K upfront, right? So you see how model he is that. And she's still working though. And I mean, that lady just got a job as well, in Lagos, for a FP and Hill, yeah, financial planning, So that's it. So 500K. I mean, of course. So December already has dirty, you know. So how many of you here want a dirty and this thing as well? December. How many of you here, want as well a dirty December?
I want to.
I know that you want, Yan. I'm about done. I know that you was. Anyway, Yan, we should not start here, Okay, so wow, so everybody wants a dirty December, right? So how about that kid just like that? God, I beg you, we'll go airport. So you see how important it is. So if you are learning a skill, so you have to be intentional about the kind of skills you want to learn. That is very, very important. You have to be very intentional about the kind of skills you want to learn. It is so important, please. So before you do anything at all, you have to look into one, the career path. So if I learn these things, so are they job for me? So do I have to beg for job? So I have to look into those things. So now, somebody who learned a quick book, do you understand? Somebody who learned a quick book and somebody who learned financial models. Now, both of them, they learn skills, isn't it? But the question is, what kind of demand, can they solve? That's number one. Number two, what is the prospect, the kind of value, I say value, money that will attract both skills. Don't forget that somebody will learn, a quick book, and somebody will learn what, modeling. Both of them learn skills. But the question is, the end result of both, what will be the outcome, right? So I think you should know the answer now. So who can answer the question for me? Anybody? Anybody? Who can answer the question for me? Anybody? Somebody will learn a quick book and somebody will learn a model. So what will be the outcome end of the day? Recall that both of them learn skills. You know?
The person that learns modeling
Yeah.
is at an advantage,
Okay.
both in demand for the skills and how much he's going to make out of the skills. So
Uh-huh.
financial model is far much better because I know how to do QuickBook. I
Very
only
well.
need to do bookkeeping. Understand?
Hmm.
So
Oh, that's so laughing. So, as your that quick book, lands you 300K, 500K before.
well,
Then
yeah, I'm
put your
only
mind.
using it to work in my present.
Aha. So
So,
that is the difference now. So you can see the lady now. So you know, modeling skills, as giving her what if I want a kid job, for this November, So now December already is dirty, right? Because don't forget that she's still working, she'll still get what her salary for December, you know. And this lady, according to her, she said that she does not pay money for power, she does not pay money for data. So you see it. So already December is what is dirty, isn't it? So you have to be guided. You have to be, careful if you want to learn the skills. What exactly are you learn? So what is the return? So if you like money very well, like this oh my pardon, so you have to choose wisely. But the oh my pardon, yeah, I'm not on that house. You understand? All
yeah, I
right.
want
So
to ask, sorry,
okay, hand, yeah.
because me, I like money. Oh.
You like money. So like oh pardon. Oh pardon, are you there? So I see your second now. Okay, go on.
So
Go
after
on.
learning these skills, these financial modeling skills,
Yes,
how do
yes.
one source for this kind of this person you mentioned? How do we get this kind of contracts, this kind of
Okay,
jobs?
okay, makes sense. So that is not an issue. Do you get? So recall that that lady, she's our student, and also the upcoming video, the advanced one, which is in 180K from it, so that it can be a baller, right? So yeah, that's what you guys will be exposed to, yeah, how to get extra income for financial modeling. Yeah, so the private equity consulting. So it is for you people. Do you understand? So majorly, if you want to enter as an analyst, so now not as an entry level, okay. So if you want to enter as an analyst or a senior analyst or mid-level executive, so that video is for you because the video is on scratch, so yes, from scratch to advanced level, right? So it's meant for those people, right? So the price is 180K. However, the early bird is 70K, and it's meant for those who are on the wait list. So if this video confirm your interest, so you can send me a DM, so I will add it to the wait list. However, some people have made payment already, and they are already in the main group where people who have paid belongs. Do you understand? Right? So, but at the same time, if your money you can't go for that 70K one, which is a early bed, right? So we have our entry level analyst program, which is 25K early bed, main fee is 100K. So right, so that one is also a good fit for you, right? So I mean some of you here who saved my contact, you have seen my post today on WhatsApp, where I posted the timetable, and the timetable is a very rigorous one, yes, so very deep, you know. So next week, by God's grace, we begin the journey of the program, and we are starting with what's it called now, with macroeconomics, Yeah. So that's that. Okay. So I think I've answered your question now. Yeah. So before we move on, let me just take 2 to 3 questions, then we move. So, what have any question before you move?
I have a question, sir.
Yes, Baba.
So my question is that is particularly on this financial modeling.
Mm-hmm.
So a friend actually sent me a company financial statement, I
Mm-hmm.
think last week, and the friend said I should help him and do the modeling.
Mm-hmm.
You understand? So it's not that he's going to pay, just a friend, and he said he went for an interview. He has done the first one, first stage, second stage. Now the last stage, now they give them the financial statement to do model for it.
Mm-hmm.
So and the guy sent it to me. On the norms, if I want to charge for that model, I'll collect up to 350,000. But because he's a friend, I just told him that I will not be able to do the whole model for you, but I will only do the the inputs and the income statement alone, and you can finish it up. But if you cannot finish it up, at least if you still send this one to them, they will believe that, wow, you have something good.
Mm-hmm.
And what Demish Consult do implement is that they do something like a guide for how the model is actually look like, and they always follow the fast standard in doing financial model. Now, my question is that is all model, we have different type of model. So
Okay.
now, a model that doesn't have historical, so like for a startup companies, how do we tend to do the base here? So the question now is, are we going to learn all these things also on that video for a startup
Okay.
companies?
Okay. Okay. Yeah. So
Yes.
if a company,
Is it going to be launched on that
yes,
video too? That 70,000
yes,
bed
yes,
and all that.
definitely. So
All right.
because being an investment banker, so typically we work on a model that does not have historical, right? So you are building it from scratch. You understand? Yeah,
Yes.
from scratch. By privilege, I've worked across many deals. You know, yeah, did this around the $50 million, $700 million thereabouts. So most of these deals, those structure, those companies, does not have historical data, right? So we build them from scratch, right? Yeah, so we build them from scratch. Do you understand? So that is it majorly, right? So in this kind of modeling that you are undergoing at the moment, so you are not going to learn. Of course, you can't learn it here, So, however, the one you are learning here, we call it corporate finance. So even though you get the job, right? So you are still on a good path because you'll be able to do something. You understand? Yeah, so that is the pattern, right? But by the time you get a job as an investment banker, you know, as an investment banker, in fact that name, that title fit as well. So the more the fitter it is, the demanding it is, right? So then that's when you have to understand. See, you have to build a model from scratch, or you are a consultant. You understand? So currently now, I'm working on an oil and gas, yes, oil and gas project finance, which is a bit complex, right? So we have to also be from scratch, to look into server shenanigans. Do you get? Right. So that's it. So over there in the video, so we are going to learn it there. Do you understand?
Thank you.
Yes, boss. So what else again? So two more questions and
Sorry,
then we should.
I think this usage of model is now a bit confusing me. Why do I say so is this? The guy said he got a financial statement and he was being asked to build a model out of it. And all the one we've been doing is more or less that we downloaded a financial statement from the NSG, and haven't done that. We try to do a forecast now. So is it the
Mm,
forecast that is the model, or what like what the guy said, getting a financial statement and asked to build a model? So what is it as what is it meant to do that is now calling a model? Just for a clarity for some of
mm.
us that did not there.
Okay,
So
okay. Let me please let me answer that question.
mm,
Remember when we were doing this training, we went to NGX and we downloaded the financial statement of NGX. Now let's
Okay.
assume that NGS is our client and
Okay.
NGS is giving us a financial statement. So in
Okay.
relation to my own question, I was given a financial statement. Let's assume that financial statement, someone that gave it to me is NGX. That
Yeah.
is the answer.
So that's what I'm saying is NGS that gave it to you. That's the assumption that in that sense you should build a model out of it. So what
Yes,
model
and
are you
that
wanted to build
that
out of
that
it?
is what we are actually doing now. We've done the income statement, we've done the balance, we are on balance sheet, we'll do the cash flow. And once the model is balanced, that means you've done the model. You just need a supporting schedule like scenario and sensitivity and some ratio analysis to back it up. And that's all.
So I want to believe model is of different type. Is it the forecast we're calling the model now, or
We have
what?
different type of model. We have discount flow,
DCF.
DCL. We have DCL. We have three statements, and the one we are doing now is currently three statements.
Okay, that the one you did for your friend now is in the range of three statements,
The
isn't
one
it?
I did for a friend is a startup. It's a startup company. When you say startup company, it means that the company doesn't have historical year. So all
Okay.
you just need to do is that they will give you some
we are doing here, it is a general model. That is, when you get a job majorly in investment research, it's good for you. Now talking about model for a startup, you know. So now when you get a job, say in investment banking, right? Advisory, okay, private equity, venture capital. So what they do majorly more is on startup. Do you understand? However, that startup model, it is part of what will be included in that upcoming video. Do you understand? So this one here is just called corporate model. Do you get it now? So let me share my screen and I will show you a typical startup model that I built. Okay, I think I've shown before now. So Williams, you get it now?
Yes, sir. Yes, I do.
Great, great. Hello, you, Marlon. So what else again have a question before we shoot? Now look at this model. This is where we are, right? Isn't it? Right? Can you all see it? So this is where we are, right? Am I correct?
yes.
So now you can see that here we have what we have historical, right? Because this company have have past, right? So why this SF means what? Means focus. So I'm coming. Let me check my. I have it on this my laptop. This laptop here. Hmm? Coming on. Which company? Okay. Now, this is a typical, startup what model, right? Consider that this one now, this is what our what income statement. This is the difference. That this one has what it has no H. Do you see it? Hello, do you see it?
Yes, we can
Yes,
see
we
it.
can.
Yeah, you can see here, you can see period start here, period what period end, right? So this is a what typical startup what model, right? You can see
You
Delmish
can build a model
Healthcare
without
Limited.
history.
However, it is not the Delmish Healthcare Limited. I built a model for a also called a what's it called now, a startup. Then I have to change some things there so that my students can use it. You understand? Okay, so now that aside, what is again? Yeah, so that's how I check. You know, so when I come to this side here, you know, uh, you can see what you have here. You can see role, you can see director, CEO, finance officer, IT guy. All of those things. You can see some assumptions. So when I come to this side here, I want to come to this from here. Yeah, you can see here. You can see, right? You can see this side, what you are seeing here. So, where is that side again? The impute, you know, I can't tell you. I'm coming. Um, okay. So, where's my guide? Yeah. So, right, you have seen. So this is what a typical what startup what model, right? You can see what I have here. You know, right, you can see the company name, business industry, business what currency. You can see the currency that you are using, naira. So details, so model start date January was 24. So next year, model what end date, December was 2020 was 27. So model forecast period, 5 years period. So number of months. So now the purpose of the model, is to raise money, to raise what funding, right? So this is what a typical investment banker does. So and this model then the client, use the model to raise 100 million. And like I said that I charge 2 million on this project. So that is what investment banker does. So tell me again, if I learn QuickBook, can I charge them 2 million for for QuickBook? So that's why that I said that if you want to learn a skill, or skills, so you have to be careful of on what you will learn, to know the outcome of what you are really learning. So that so to know the outcome of what you are really what learning. So, however, these are the things that you will learn in the upcoming video. You know, yeah. So which will be released in December, right? So if you want to make a good gigs, in this industry, yeah. So do yourself a favor on how to build a model, both corporate model and also a startup model. Since I have a question in the chat box, so that's that anyway. So before we move on to the class, yes. So can we move on now? Saka. So Saka, last person. Then we move on.
Sir, good afternoon, sir.
Yes, Baba.
The one you just showed us now, I want to get it right. What you just showed us now is the startup model, right?
Yes.
It doesn't have historical.
At all.
And the one we have been doing so far, that one is what? Company what?
Corporate.
Sir?
Corporate. That one is called corporate model. Corporate.
Okay, corporate model. Okay,
Mm,
okay. I can say the difference. Thank you, sir.
mm-hmm. So if you want to learn about how to build a model for a startup model, so put in for the upcoming video, which will be released next in December. All right. So it is
But sorry, sir.
mm,
How about the entry level?
entry level.
Are you not taking us for that entry level?
Okay, for the
Startup model,
entry.
are you not taking us for
Okay,
that entry
for
level?
for the entry level, I am
Yes,
not
sir.
your so I am not your instructor. Do you understand?
Okay.
Yes. So it is left to your to your instructor. Do you get?
Okay, thank you, sir. All right, sir.
Yeah, I'm not in shock here. All right. So, we can go ahead now, right? You can guide as Yano left the call. Let me see.
Still, I'm still here.
Oh, okay. Oh, but they're still there. All right, I'll check it if I left the call. All right. So, yes. So, thank you very much, guys. That's making sense. Why this change force here? Have I done anything? Okay, you have not done anything yet. Let's go on. Yes. So this is where we are. Last week, I've explained this concept to us, everything here, right? So now, what we want to do again today is, of course, so this idea as well, like I said, we want to focus this aspect now, isn't it? So that's what we want to do today. Very simple. See, this thing is not hard though. Let me tell you something about model. When you are building a model, this your input or assumption or your schedule. That is where the stress, is. You have to do this, you have to do that, that's where the stress are. But by the time you are done with them, come on, come on, come on, just be smiling, to see that you get everything, properly. All right, all right, all right. So yes, so now we want to forecast, we want to lay our assumption. Like I said, here should also, yeah, this idea should be in blue. You understand? Because they are without formula, so it is be in blue. So they should follow this format here that we have in this place here. You understand? So just copy it, you know. So copy it and you drag it like this. Okay, so once it's like this, you stretch it, then you press Alt ES. So you come to format or you press T format, then you press OK. So after that, I've gotten what the same format. I think last time I told us about the need or the importance for doing this thing now. So you have to go back. Well, you got
Tutor,
continue this.
your method is always a long route.
Okay, so I so I think I thought of last week about this thing, that I mean, Damn Larry, what you said that time just reminded me of when I was in school, you know. So I studied them economics, and we do math a lot. So back then in school, I used to collect an extra sheet, at times 4 extra sheet, 6 extra sheet. I think I also collected them about 8 extra sheets then in school. So when it comes to mathematics, right? So I solved mathematics a lot. So I have to use both long route to and shortcut to. I will explain. Oh my God, more school those days. I love school. So I used to love do several long route to back then. So I'm used to long route. Don't mind me. So even though if I'm writing something too, I love to write them a piece too as well. That's me for you. So I love long routes, you know. So ah, is it not good? What's her name?
It's fine.
So I love long route, So if I'm writing, I write some stories, So either it is written or it is okay. So yeah. So now we have represented this format, right? Aha. So now we want to look something here. And this is what? Long-term receivables, you know. So our long-term receivables, right? So where should it be? So should it be under who called me? So should it be yeah? So now our long-term receivable, right? So now how do we get that? Like I said that this pattern that I'm teaching you, however, it is one of the um, one of the most acceptable pattern, globally, right? So now, so your long-term receivables, will always be benchmark against your revenue, okay? Because from the word there, receivables, it is what is coming to you. So it is against what? Against your revenue. So how do you do that? So now, very simple. I'm coming. I'm coming. I'm coming. I'm coming. I'm coming. I want to check something here. I'm coming. Wait. Okay. Ah. Okay. 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 Makes sense. So now, so this pin should not be here. Ah, these things here, should not be in this place. These figures should not be here, but nevertheless, we are good to go. So now, this is what long term receivables, right? So you have to examine the percentage. So the percent should be against our revenue, right? So now go to press equals to, like I said that these numbers, they should not be here, yes, they shouldn't. You understand? They shouldn't be here at all, at all. So what will happen is this, right? So now equals to now go to your balance sheet, long term receivables, right? Go there, go and look for it. This our long-term what? Our long-term receivables, right? Okay, this is it here. Hello, can you all see it? Hmm?
Yes,
Yes, we
yes,
can.
we can.
So then divided by, okay, like I said, your what? Your revenue. Don't forget that. So go to your income statement, by your what? Revenue, right? Okay, great. So then you drag it. Okay. So when drag it here, so come to this percentage here. So convert it to what? Convert it to percentage, right? Then you increase the decimal. So we have 0.7, 0.6. So now, in this place here now, so what do you think should be our forecast? Should we maintain 0.6x? I mean, 0.6 percent, or should maintain 0.1? So what do you think? So what you think? Put it here. You understand? So now again, this is what our inventory. All right. So your inventory, should always be against your cost of what? Cost of sales, because there are stocks, that you have to sell. So your inventory will always be against your cost of sales. So please note that one down. So your inventory will always be against your cost of sales. Do you understand? So equals to, now come to where a balance sheet, you know. So this is your what? Inventory, then divided by, you go to your income statement, this is what your what's it called now? Your cost of sales, right? Yeah. So again you drag it, right? Then you come to this side here, percentage, give it what? Percentage. Now note some
Sorry, Spoto.
mm,
I'm sorry to cut
mm,
in.
uh,
I have a network glitch when you were doing the long-term receivables. I tried to do it off, and since you said is a long-term receivable against the revenue, so I
mhm.
tried to do it, but I'm getting 0.1%, which I don't really understand
Or
where that
what?
is coming. 0.1%.
So again, equals to, right?
Yeah, yeah,
Balance sheet, right?
yeah,
So is it the same thing? Two,
yeah, yeah, yeah,
okay, divided by. So go to your income statement, right?
yeah,
Your
exactly.
revenue, is it the same thing?
Exactly the same thing I did.
Right. So then you drag it. So then you come to this percentage, change it to percentage. Click click on this thing here.
I know, I know. I'll just try and redo it again. I don't know why I'm getting the different answer, but
No,
I will.
your own is actually correct. You just need to increase the decimal. Once you
Okay,
increase the
okay, wait.
decimal, it
Oh,
will change.
Just
so what do you
increase
think?
the decimal place. That's it.
So
Okay,
increase this,
okay.
yeah.
Thank you.
Increase it, yes. So now, okay, this one again, inventory again. So equals to balance sheet, right? So this are our what? Inventory, whatever what? By our income statement. I'm coming now. Yeah, where are we, Seth? Okay, we are here now, right? So we have this, right? Then you drag, So look at something Tuesday. Okay, all the best. So now this now we have minus here, right? Minus 27 minus 30. So note that this minus you are having, you have so your balance sheet should not have minus. So do you understand? Because yes, so it should not have minus. It is not ideal that balance sheet should have minus. Do you get it now? So you should not have a minus, right? So just type what you want to type inside this place. Sorry, not having the negative sign. It is not ideal that you should have a negative sign in your balance sheet. Right. So when you see any model with a balance with a negative sign, it is not a good model. However, except that if the company literally report negative. In fact, it is rare. But now given the current exchange rate, about this floating of naira, which is now affecting consumer goods. So Nestle reported negative, I think in 9 months, yeah, in 9 months 2023 result, and the retained earnings was a negative, yeah, so which really impacted them. So that case is different entirely. Do you understand? So in an ideal modeling, you should not have negative. Do you understand? So just have that in your mind, right? So in your balance sheet, yes, so you should not have at all negative. So now, so you type what you want to know, what you want here. So also your return, your right of return of asset, should be against the revenue, right? So like I said that this right of return of asset, I will explain to us, but then don't have our time, but let us continue first. So equals to where are you or return right of return divided by what's it called here by your revenue, right? So trade receivables also your revenue, all right. So revenue has a strong edge. Do you understand? Right? So come to income statement as well. Your revenue, right? Okay. So also prepayment, as well your revenue. Okay. Where are you? Where are you? Where are you? Where are you? Right? Revenue. Right. Okay, makes sense. So then you drag it, you drag it, right? So you can just come here, just copy this one and say that or EST, right? Format it, right? So great, good, yeah. Why this one should give me sort of this is okay. All right, so great. So now we are good to go. So now this share capital, share premium, share base payment reserved. So this one, what we will do is the ending balance because you are not the company. You can't decide for the company on what kind of share capital they have to raise. All right. So that one just use your ending balance ASAP. Yeah. So yeah. Okay. So the next thing, your dividend payout ratio. Again, very simple. Let me also copy this thing, right? So that not having time. Right, alt est, right. For now, and we copy this side here. Right, so alt est, right. Right, so now this side here, now dividend payout ratio, how do we get it? Very simple. It is your dividend, divided by your net profit because when they when they make profit, that is when they will pay what dividend. So now equals to now go to your cash flow statement, right? Cash flow. So go and look for dividend, in it, right? Go and look for dividend in your cash flow statement. Where are you? Where are you? Where are you? Dividend. Oh, where are you? Where are dividend here? So dividend should be in this place actually. You know, please help me to look at it too as well because I don't have the glasses. So um, my friend Ian help me to check it too. If you see dividend payment here. So dividend should be in this place actually. Where are you now? Dividend, where are you? But this is not correct. It's not complete. Ah, dividend should be in this place, so you know. Okay, so do you have this thing dividend in your own stuff? I think this
Yes.
is not correct. Is your own Abby?
Yes.
So I think well this thing is not complete. That's why.
And it is. Can you help us with the line you have it? Because I'm checking, I'm not seeing as well.
Um, dividend paid 30,730,729. I'm not.
Okay, so you know what will happen?
Line
And
what?
Based
let's
on
remove
what I have
the
here is on line 46.
so let us go back to the what's it called? Go back to the what's it called now?
Yeah, it's there. Just check. In my own, I have the line 44. Just check within that range, 46, 44, and you'll
Okay,
be able to say.
okay, thank you. Cash flow. 40 what? This person did not up to 40. It's not here, you know. So let us go back to the what's it called? NGX. I think I was here before. I was there today. You know, I like money, so I was here today. Ooh, I like money, so I was here today. You know. Yeah. So Nestle. Yeah, Nestle. So this is search Nestle. Nestle. Oh, Nestle. I love your presence, your way. So our friend did not include a Nestle in them. Did not actually. So Nestle. So dividend should be, like I said, it should be here. You know, where is it? Okay, 2022, 2021, 2021. You know, all right. So this is here, right? Right. So carry it. You know, come here and see 2021, right? Then again, they carry this one as well. You know, 2022, 2022, right? Very correct. All right, makes sense. So let's say dividend, and command control, right? Okay, so makes sense. And come back to our input, So said so now equals to now income statement. I mean cash flow, right? So uh, this 2020 what 22, 21. Come no come.
There's a mistake there.
Mm-mm. So let me correct it. So this is 21, 22, right? 40 million in 2022. 30 million is what? 2021. Okay, I think it's correct. Okay, yeah, we're correct. All right, so we are correct anyway. So now equals to cash flow, you know. So your dividend, divided by your also called now your net profit. You understand? because when they make profit, that's when they'll pay dividends, right? So, right, they drag. So, yeah, 28, 78 percent, 8%, right? So, going forward, right? Like I said at this place here, okay, should be in positive, all right? So let us continue anyway. So now, borrowings, leave it alone, you know. That's where we are going to do last, all right? So now, also our employee benefit as well. Also, I'm going to use the ending balance, right? Oh, yeah, 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 yeah. Give it number, then give it this one, right? Right. Okay. Yeah, so I can drag it further. All right. Making sense. So now, also your lease liabilities. Want to talk?
Hello,
Yes,
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 please. Why are we using ending balance for employee
yes.
benefit?
Because in fact, it is very simple, simple and so straightforward. It is the benefit accrued to the company. So they decide that one majorly now, employee benefit. Like you are not in the company to, it is majorly of management decision, isn't it? So management make that decision that okay, so this is particular benefit that our employee, should to benefit. So you don't dictate it for the management. Do, do you get? So if your company will give you rise in December, do you make it for them mandatory? Eh? Hello, can you hear me?
Yes,
You.
I'm getting it
So
now.
so do you for them, say, hey, management, you like it or not, you must give us rise
No, no,
this in December. Do you? Is it possible?
no.
So it is not. So like where I work now, so our rice is ready, right? So the rice is ready because of part of the benefit, for the employee, right? So why some people who came were like, oh, in the former company, their bosses, the company does not share rights, does not give people anything, and they can't complain. Why? Because of they have no right to say, hey, management to this, no, no, no. So they decide who to give. I mean, they decide if they will give or not, right? So that is why you have to use ending balance. So all right, so your lease liabilities. Okay, so these lease liabilities, right? We shouldn't. Okay, so we shouldn't have it here. We should add our lease liabilities to our what's it called now? To our what's it called? Borrowings. Right? Because lease, we are not the owner. We borrow the place. True or false? Hmm? True or false?
True.
True, true, true.
Yes.
True.
So we should not add it here. So there's something about building model. So now if you have a consistent with model, sincerely, you don't have to cram anything. Just about understanding the framework and that's all. Do you get? So you should not at all. Mm-hmm. Let me delete this gentleman. You know, right? Aha. So now our tax, the VAT tax liabilities. So let us no sorry. So let us benchmark it against our revenue as well, right? So you can either benchmark it against your revenue or your PBT, right? Profit before tax, but preferable, I prefer to benchmark it against revenue, right? So what else? Okay, so now balance sheet, and go and look for the gentleman. Where is the gentleman here? Gentleman. So this is the gentleman. So yeah, divided by what? Income statement, revenue, you know, right? So then you drag it. Okay, so then you copy it. This one, format it, right? So, but es. Remind me, I do Excel this thing very well. Shenanigans, right? So now our trades and other payables, yeah. So we also be against our inventory, right? Okay. So come here. Sorry, your balance sheet, trades, right? This is it here against your what? your inventory, right? So then you drag it, right? Drag it. So current tax liability is also against the what?
What did you do here, sir?
Well,
You trade another payable.
yeah, it is against your inventory equals to
Okay.
yes. So this is the man here. I mean, this is it here, right? That's the man, and against this gentleman. You understand, right? So then, Abi, again, equals to balance sheet. This gentleman here, against what? Your inventory, you know, right? So you drag it. You understand?
That's cost of
Yes,
sales.
yes, 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 cost of sales, yeah. So yes, against your cost of sales. Do you understand? So because it is also, I'm coming. Who is calling me again? I'm coming. Sorry. Your contract was contract liabilities is against your revenue, right? So everything majorly like against your revenue. You understand? So apart from what's it called now? From trade payables and inventories that will be against your inventory. So however, you have to see that you also read on your own as well. You know. Yeah. So we are getting there. Mother is sweet, it's stressful, but if you are making the money, will you remember me? You will not, you will not at all remember me again. You understand? So, damn Larry, if you're making money now, so will you remember me?
Yes, I will.
They play. Yanu, if I'm making money, will you remember me, Yanu?
You know
They
now.
play. They play. So let's just see. If I'm making money now, so will you remember Michael?
That one is 100% now.
Iyo. Like, how about you? So, we look at our this thing here, our overdraft.
Sure, sir.
Scam. So look at our overdraft in this place. So
Sir, you said the trade payable percentage of inventory.
yes, please, yes, Papa. So we look at our also called there, our this thing here, overdraft. Overdraft is zero, right? Just maintain that status quo. Zero. Yeah, drag it. So that one should not give you a problem, right? So also your also called now current tax liabilities again, your revenue. Like I said that everything majorly are against your revenue apart from trade receivables and payables which are against your inventory. All right. So yeah, come to this as well, benchmark it, and also this as well, come and benchmark it as well, probation. Right. So divided by, right. So benchmark it, right. So okay, okay. Let me drag it. I love your presence, Yahweh. I love your presence, Yahweh. Okay, so EST, right? Makes sense. So now, what next now is want to Okay, so now from here now, so what should we do? Should we maintain this 57%, right? Or we should think about, okay, so what will likely happen in the future? So just think about what we feel like, what the payables will be like. But because of our time, we can maintain 51.7% point one. Do you understand? This is our time, right? So you on your own can now decide what you want to, I mean, do going forward. Do you get? So it's now left to you, you know. Aha. So
Excuse me, sir.
yes, yeah.
Please, I just want to understand something.
Mm,
Like this one now, if I decide to make it 60%, will I still be correct
yes,
in my
now
book?
you're correct. Now you'll be
Oh,
correct. You'll be correct. So, but just see that you can defend it. Do you understand? You, you'll be correct too.
Okay, maybe we just need to help us out. If I decide to make it 50%, what would be my rationality for saying for using the 50%?
It's on you now. It is how you
No,
so.
no, no. You just give a scenario by yourself. Probably you have the 57 and you decide to use something else apart from the 57%. What would have been your rationality for considering another percentage? I just want a heads up so that when next we are thinking, we know how to which angle to look at it from.
Okay, no problem. No problem. It makes sense. You know, I'm coming. Oh, yeah, so we have 5.9. I'm coming. So yeah, we have 5.9, right? In this case. Then we have 0.2. So that lady that said that if they make them 70%, would that be correct? Do you know what I was thinking before? Yeah, funny. I'm teaching you a model. You asking that will it be correct? As far as you follow through everything I said to you, I mean, your model will be balanced, at one attempt. It's not pride though. It is audacity. You get. All right. So okay. So right. So now, so do you think this company, will pay more dividend next year? You know, well, depend on you as well. But I will still explain what Damnare asks, right? But then that we can move very fast. For now, you know, 20, 20 what, 28, 26, right? I love your presence. You are very aha. So we are getting better. We are getting better. So 30%. You know, 0.02 and 02. Right. 18 point what? Point 4. Right. 0.4. Okay. Oh, right. So then 0.6. 0.6. Right. Are we here? Are we sleeping?
Yes.
Can
No,
you hear
no,
me,
we are
sir?
following
Yes,
you.
I can
We
hear
are
you. I can hear
following.
you.
Please, can you do the trade and order payable again?
How come?
Yes, the trade and order payable. Can you go back to it again?
Yeah.
Yes.
Your trade now divided by, I mean, yes, trade and other payables divided by, also called again,
Eventually.
event. Yes, yes.
Yes, I want you to do it again, sir.
Okay. So equals to balance sheet. So where is the man again? This is the man now. 148 divided by, this is the man now, Abby. I mean now. But it's not correct. That's it now.
It's giving me wrong thing. That's why.
Voila. What's the giving elasticity?
You said inventory. Is you are but you are clicking on income statement now.
I no, see it now. I can see.
It's not in cost statement. Cost of
Cost,
sales and
he's taking a cost of sales on income statement.
Oh,
So when
equals
when
to
when you
balance
say
sheet.
inventory,
Hey, oh, sorry. But see it now.
okay, okay.
148 divided by,
Divided
uh,
by cost of sales.
yes,
Uh-huh.
Abi.
Yes, yes.
Nah.
Why is this
Okay.
refund? No, not that one. Bank overdrafts.
Mm.
I was thinking you are taking zero in all of
So
them.
since there
Why is this
okay,
one
yes,
150?
yeah, aha. Another thing again that you have to note very well again is at times Excel might give you something else again because when you put your cursor here, see that it has no formula. Do you get? So this thing might cause error for you, right? So you have to check again very, very well. Then you drag it again. So you drag it. After that, it has go away. So it's Excel doing wonders. Do you understand? So not me. Thank you for seeing that on time. Otherwise, two of us will just be there and be looking like a marabout. Do you know what marabout means? Hmm? Right? So, aha. So making sense. So we are there, we are there, we are there. So now, what next want to do now is want to solve for our working capital, right? Our what? Working what?
Please, before you forget, I
Mm,
would like you to answer the question Damilare
no,
asked.
I want to
What
forget. I want to forget. Oh,
that
just
60%? Okay.
yes, I will not forget. Don't worry. Just relax in mind. Okay. So just trying to play safe, of our time. Do you understand? Right. So now, what else again is we want to um solve for our what our working capital. You know, working what working capital. Working capital now. Recall that last week, when I was talking last week, I said that everything here, they are what our working with capital, right? Remember that. All right. So now, what do we have first? We have what's it called now? We have non-current assets. Non-current assets, right? Non-current assets. Let me control you it. So now, under the non-current asset, what do we have in this list? Come up here.
Sir, working capital and non-current assets, are they related? Because I think working non-current has to do with PPE, whereas current assets and the current liability is the one that has to do with working capital.
Yes, are correct. So, but this our how's it called? This this thing here, where is it again? This our long-term receivables, right? Can you see
Yeah,
it here? Yeah.
I can,
So,
I can.
ideally, I'm coming. Okay, again, so bye. Give me feedback. This our long-term this thing, right? Receivables.
Yeah,
You know,
yeah,
recall that last time when I was teaching you guys, I said that this thing should also be under our current asset. All right.
yeah,
But
yeah.
because of our time, and I want you guys to understand this, so I don't want to make it more complicated.
Yep.
So I have to let it remain where it is. Because when you check our balance sheet, you can see that it is under non-current asset. Do
Yeah,
you see it?
yeah,
This
yeah.
is so, but I don't want to change anything at all. You understand? So that's why I have to make it to remain where it is. So just to say that okay, so that thing has we still follow was the same pattern where it is. It still was under our non-current asset. You know, you get because of the
Okay.
complaint. Yes, that complaint reported it under non-current asset. Do you get it now? You understand? So this company, reported it was under non-current asset. However, it is part of our also called our working capital, right? So, but if you report it as a current asset, nobody will beat you. You are correct. You understand? But I don't want to change it, and to make it a more hard for you guys because of you guys want a soft life. You guys. All right. All right. Okay, so now this place here, hmm, I'm coming now. Okay. Which place? Now makes sense. Now that time when I was benchmarking it, I benchmark it against what? When I was benchmarking this this man here, I
I think
benchmark it
revenue.
eh, against what?
I think I'm not sure.
Against revenue.
Against revenue. Okay, great. So now you come here. Hmm? You come this side now, this side here, we said percent of what? Revenue. Revenue. Right. So then Now, do you get it now? Do you get this side? Hello, do you get this side?
Let's keep moving. Maybe
Yes,
we will.
yes.
You know, this answer was benchmark against what revenue, right? Isn't it? So that's why I put what um this in there, percent of what revenue. So now, next thing is what now? Current what? Current asset now, right? Let me come up with this. Current asset. So let me control it. What do we have in our current asset? What do we have? What do we have? We have inventory, right? Cost. You can even you drag it down. So that's that. So inventory, write off, trade, prepayment. So when you go and check it, so you have what the same thing. So now the other time I benchmark inventory against what?
Success.
So now the what now? Percent of what? Percent of cost of what? Cost of sales, right? Cost of sales, right? Isn't it? So now this one against what?
Against revenue.
Revenue. Great. So percent of what? Revenue. Now this is against what? Revenue too, right? So percent of what again? Okay. So that's that. So now also our cost of sales, our current what now? Liabilities now, right? So this place should give us what total. Here should be our total. Total, yeah, should be total. Total, total current assets, yeah. Right? Here should give us total what? Hmm, okay, let's continue. So now next one now is what now? Current what? Current liabilities, right? So control U. So go and go up again and go and bring it. So what we okay, non-current liabilities first, right? So non-current non-current what? Non-current so we have what? Employee what? Employee benefit, isn't it? We have employee benefits, right? We have what again? We have deferred tax liabilities again, right? So now our this one record that okay, this one is against what? What do I do to our what's it called? Our employee benefits? Anybody? Look and look and remind me.
We use the ending balance.
Aha. So they'll say ending what? Ending balance. Do you get it now? Aha. Oh, okay, let me say ending balance, not called ending. Aha. So now our tax liabilities against what? Percent of what? Revenue, right? Right. Aha. So you guys are becoming a modular small small. So then we have what now? Current what now? Current liabilities. You know. Yeah, now you here. Yeah, no. She has left. So we have what? We have this one, right? From this place. I just put your cursor here and drag it down. So if it's showing you zero, it means that there's nothing in that cell. That's the meaning, right? So then you can now say here can be what our total what total liabilities. Ah, liabilities, liability, and just okay, makes sense. So this is against what of what trade
Revenue.
and
Revenue. Against
no
revenue.
cost of sales now. I forgotten.
Cost of sales, yes.
Yes. So why our contract is against what? Against revenue, right? So everything is against what revenue, right? Apart from our also called our overdraft and the balance. Right. So I think we are done. So now okay, you want to you want to learn model, you know.
Hello, sir.
Yes, bro.
Please, how do you do this your formatting,
I think
please?
this one already last. I explained this thing about this thing now.
All
So you can
right.
just go and watch the video. I explained it in our what's it called before. Do you understand, my man? I explained it before in our first class. Said about you get all of our time. All of our time. Sorry, bro.
But on a lighter mode, let me just help the guy out. Just
One
click one
second.
of the cell, use format painter,
Aha.
and drag to wherever you want to drag to. You will see it.
Thanks.
You're welcome.
So how much now we pay them now? That guy has to pay you them now.
He's a friend and a brother in Christ.
Play. All right. So now, yes, I think we are cool now, right? So now, so we all understand what we did here, everything. So now not to forecast now. You see that long time, long time what this is what variables. So now you can say equals to this thing here should be guiding you, okay? Should be what guiding you. So now go to where? Go to your what's it called? Hey, sorry. So something is missing here. Something is missing in this place. Okay, so let me. So now, what you will do here is you go and bring your what's it called revenue because we want to forecast now. We want to forecast it. We want to forecast something. We come in on cost of sales, cost of what? You understand? Mm, right of CST, right? Okay, so now go and bring your revenue and your cost of sales because that is what that what you will use as the driver for them, as the forecast for them. You go and bring it. Your forecasted revenue, not your historical. You go and bring it. If you want to bring it, also your listener as well. Go and bring it. So drag it. All right, lovely. So now you have to bring your revenue and cost of sales. They are so important. So now in this place now, we want to forecast our this now working with capital. To forecast it, so equals to right here we have what? What do we have here? What do we have here? Hello.
Percentage of
Percentage of
revenue.
revenue.
So now go to your revenue. This is right revenue. So now times what? Times your what? Percent. You know. So this one that you are forecasted. Where is it again? This yes, this is here. Do you see it here? So enter. So also cost of sales, is what now? This right times what? The forecasted what? Forecasted cost of sales. Where is it? Where is it? Where is it? Keep it here. Remember, I said that this thing must not be what? Must not be negative. Right? Am I correct? Record
Yeah.
as so just come here and change, put minus at the back here. Right? So it will turn into positive. So also again, your return of what? Return of assets.
Right of.
Yes. Also go and look for it against revenue, right? Return. Where are you? 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 So this is return, times what? Revenue, right? Correct? And revenue, right? So then trade as well. Trade and other receivables, right? Revenue. Where are you trade? So you can continue, So if you are following me, so just focus your own, like that. So that's the logic. So then repayment, right? Repayment as well. Revenue. Model is not hard. Revenue, right? I love your presence, Yahweh, right? Aha. So they can now, drag this one further. Then as well, the drag point further as well. You know. So now total now. Okay, now this total. This total as well. No. Now this is a total, right? The total here. Go and bring your historicals. I'm coming on. So your total, before you get a total, I'm coming on. You have a missed call. Now, this is your inventory. Your inventory. Now go and bring your last historical. Your what? Last what? Your last historical. Go and bring your last historical. Equals to go to the balance sheet. Inventory. Last historical equals to right of return of assets. Last historical equals to trade receivables. Last historical. So equals to what? Payment. Now, what you do here again is first, then you sum it, sum everything from we have what 172. Now Come here again and come and check if it's correct. If it's what correct equals to some, check it here if you are correct too, because 172,579,475. Is it correct? 475, yeah, correct. So can come here and you delete it, right? So now, so also right, your this one as well, receivables. So equals to long term receivables. Go and bring it. Where are you? Where are you? Please this one. So you can now let me put a space here. Can just say this one, right? This plus this now, right? Correct? Mm-hmm. Then you drag it like this, you drag it further. All right. So this as well, you drag it, right? We're correct. Yeah, we're correct. So also here is what our what end balance. So employee benefit, end balance, employee benefit. Where are you? End balance, right? We drag it. So also go to your historical, go and bring your what employee benefit, go and bring it for us. Where are you? Where are you? Remember, where are you? Okay, put it here, right? And also your our deferred tax, also go and bring it as well. Deferred tax, where are you? 14. Okay, so we can form it here equals to one. Yeah, can just write it together, right? So now this one, rent of what of revenue, right? Employee benefit. Sorry, deferred tax is times what revenue, and drag it further. Are you following? Don't worry,
Yes.
you will see what the video. So now our trade and also called our trade. Also go and bring the also called the historical, last historical, right? Also contract. Also what next? Refund liabilities, same pattern. Okay, we have our friend here. Please see that you are picking the right thing, otherwise your your eyes be clear. Foreign tax, then provision. So form it together, right? You know. Okay, great. So now see that again, go and again, check it again if you are correct. Just to see if you are correct. You understand? Abi, where do you pick it from?
That is from current liability.
Okay, okay, okay. Thank you. So equals to So 210, right? 210, is that correct? 210, 057, 33.
Yes, it's correct.
Correct. So, all right. Great. Then delete it. You can come back. You save it. You understand? So then we have what? Equals to what? Equals to, this, right? Plus what? Plus this. You understand? You can, drag it now. So these are what total what liabilities, right? And this, so then, so now to focus now, cost of sales, of what revenue, right? Sorry, percent of what of cost of sales now, our payables. So payables. Where are you? Where are you? Where are you? Where? It's payables, right? So times what? Cost of sales. Like I said, this thing must not be in what? Be in negative. So change it back to, convert it to positive. Do you understand? Then you can, okay, cool. Then the next thing is what? Revenue. Contract what? Liabilities against what? Revenue. Contract liabilities. Where are you? Where are you? Where are you? Where are you? Contract liabilities. Contract liabilities. Contract liabilities. Revenue. Mm, revenue, right? So refund against revenue as well. So yeah, what do I can pick? You have to be careful. Refund liabilities. Refund liabilities. Okay. And what? Revenue. Okay, so you have to go back very well. Where are you? Where are you? Where are you? Where are you? So let's say we increase the decimal here. All right. So yeah. Okay. Drag it. All right. So something should be here now. All right, makes sense. So okay, this one is zero already. You know, remember it's zero already. So contract current tax liabilities as well equals to revenue. Remember, current tax liability times what? Times revenue and provision revenue as well. Is it hard? Hello, is it hard?
No.
Very simple now.
Somehow.
Hey, yeah, somehow. Sorry. So then you drag it. Yup, yup. So now, what next again that we now have here? So in this place we now have changes. No, we have OWC. Who's calling me again? Come in. That's that. So the next thing now we want to do now, you know, is now we want to link it now. What to do was we want to link it. So what now do is come to a balance sheet and come and link. Come and what? Come and link it. Right. So to start with long term what receivables, right? So come out to, let me ask for time. What time, please? Long time what receivables. Okay. Long time. So go and bring it. Input. This is it, right? So you link it. Also inventory as well. Inventory, leave it here, right? You link it. Also, right of return of assets, you know, you also what you link it. Also, trade and other payables as well, you know, you do what you link it. Also, prepayment, you do what you link it, right? Prepayment, you link it, right? Okay, so so then nígbà tí all right, so now yeah, so equals to sum of everything here, so everything here, yeah. So then our total asset is equals to our current asset, you know, plus what this one, right? All right, then when you drag it anyway, I'm coming here.
Because it has no figure yet in the other part. We've
Yes,
not dragged
yes,
it
yes,
to
yes.
the other one.
As far as this as they can drag this one, they can drag it, you know. Yeah, I can drag this one, you know. Can drag it. Can drag it, you know. So you can also drag this one as well, you know. So this as they can also drag this one as well, you know. So you can see first, Abby. Because so now our cash, you know, let us leave it blank. Let us put something there. All right. So our cash is missing. You understand? All right. So can also hold in this place. Yeah, like I said, this place here, you know, will always be what our handy balance. Record that, you know. Remember that handy balance, you know, handy balance. So handy balance. So only your retained earnings, you know, will not be your handy balance because I mean only your retained earnings that you will solve because of this one is so important, you know, and it is against the dividend. But don't worry, I will show us next class. All right. All right, all right. So we are having, you know, negative, negative, negative. You know, just relax your mind. You know, right? So yeah. Also, again, our borrowings. Right. So also again, our leaves. Remember that the other time I said that we should have them. We should add our leaves to our what to our borrowings. I think I'm having a note here. Add short-term lease. Add short-term. Add the short-term lease. Okay. 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 By the time you want to come next time, so I will check this again properly. So now our current our trade this now our trade now our trade, right, and other payables. Where are you? 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 Trade, other payables. Where are you? Where are you? Trade. Yeah, it is right. Also contracts, right? Also refunds, all right. Also what overdraft, also current tax liabilities, also what else provision, right? Makes sense. So then you do what you drag, right? You drag my G. So what else that I yet to do here? So employee what benefit, you know, right? Employee benefit, where are thou? Here it is. And also the VAT tax liabilities. The VAT tax liability, right? So you drink it here. So um let's see this, they're correct. Yeah, correct, yeah. Also this, yeah, correct. Also this. So your liabilities is equals to what? Total current liabilities plus current liabilities, right? So that should be the answer. Drag it, yeah, correct. Yeah, correct. So and so your total equity, this will be this, plus what? Plus equity, this is the equity here. Right. So right. So now we have not done our what? Our okay. I think I have to, drag it from further. Right. Also further as well. So what else do we have here? So now return earnings. So these are the places that next time, I mean next class, we are going to look into. You understand? And from there, also property, plant and equipment as well. So, ladies and gentlemen, our model is coming to life gradually. Right, all right, all right, all right, all right, all right. Mm, 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 mm. Yeah, model is coming to life. Get that? So, yeah, any question? Any question? Any question? Any question?
I want to ask, when we
Mm,
are done with this model, how do
mm.
you know you are correct?
This thing here, eh? Can you see it? You have seen force, right?
Yes,
So it will change to
true, true.
true, or balance,
Oh,
balance, balance, or okay.
okay.
Do you understand?
Yes.
Mm.
You said you will answer my question, the rationale behind choosing it.
Oh, okay, makes sense. So wait again. Wait again. Anybody else again? Anybody? So hope you understand everything now, right? More. I get tired. Anybody else again? Yes, your board of directors can fire you.
Winner.
Oh, we know.
Very good.
All right. Okay, so now since we do not have anybody else ask question, right? So, but before then, let's see that all of us we all our model is updated. You understand? It's updated, right? So yes. So now back to what Damnary asked. The first place. Where are you, Damnary? Wow, this thing is looking beautiful. You know. Right. So Damnary, where are you? Where are we? Okay, that's a question the other time about payables. Yes. So now this right, Damnary.
With you, sir.
Yeah. So now, so the first question that I want to ask you is, what is trade payables first? What is trade payables?
The payable is the people that you are owing money that you want to pay them in the future.
Okay, lovely. So now that you have no headline of the year, I'm coming. JP Morgan. Yeah, it is right. So talking about now trade payables now. Now people that you are owing, right? Correct? That you want to pay them. So it,
Yeah.
it means that that out of 100%, so they have some percent, they want to pay, right? So a year before 2021, it was high, 61 7%. So then the following year it was 57%. Now, is it a good move for Nestle? Well, it is a good one because because of what they were able to pay on time. So now, do you also see a scope that okay, so next year, Nestle will also pay their debt on time, from people they buy goods from. Do you think so? That's the meaning. So because of okay, so last year, the ratio or the proportion was 67%, and this year they did well, and it came down to what 57%. So what happened? So do you also think that Nestle um will also achieve probably 40%, trade payables, they will do well, to be a good boy or be a good girl. Do you understand? Just like now, for instance, now, say, damn Larry, you borrow Lasisi money, right? Say 2 million, right? So now that 2 million, before damn Larry pay, I mean before Lasisi pay you back, you know, both of you had what an agreement that oh you pay me this money back. Oh. You say yes, that in 18 days I'll pay you back. But eventually, Lasisi did not pay you, 18 days. So he paid you 20 days, right? No, you'll be angry that how come now, 2 days, 2 days, no, sorry, he paid you, let's say 30 days. You be like, how come Lasisi, why so this money is getting what too long. But anyway, Lasisi paid you that money back. So then next year again, same man again, Lasisi, came back to borrow money from you. You were like, Lasisi, this money, please, 18 days will pay me back. But recall that the last money you borrowed him in the first place, it took Lasisi 30 days to give you the money back, right? But now, this time around, Lasisi get the money from you, but he paid you the money back in 21 days. Do you understand? So now, the third year, Asisi is coming again to borrow money from you. Now, as a person, what will you think? Okay, when we talk in the first place, yeah, he tried, from 30 days, he gave me the money back, in 20 days the next time. So now the third time, so it's coming again. So do I think Asisi will give me this money back in 18 days? Or will he give me the money back um in um in 19 days? So that's where you now think before you now borrow as what that money. So the same thing again is also what applicable to the trade and other what payable. So do you think Nestle will have to pay back, in XYZ day? So what percentage, do you think? Right? So that is the objective for that. Do you understand? So you have to understand um also called now understand them working also called trade and payables, what they means and they're about. So that's it. So that do you get it now?
I get it, but being in percentage makes it more much technical to me instead of days. If when you are citing the example in days now, I understood the fact that oh, using a lesser days, using whatever. But being in percentage, does that mean is the 57% is representing higher days or lesser days? The
Ah,
percentage makes it more technical
No, no, I think that
explanation.
percentage is representing the total payable value, the value of payable. That's that the company is owing.
of
That's what.
course now they are still the same thing now, you know they are still the same thing, I'm Larry. So but
Well, but it
nevertheless,
just makes it more technical than using days. The way you use it, like, oh, it pays me 30 days, now pays me 21 days. Now, me trying to interpret 57 days is making me not to be able to get a better
okay,
angle on it.
don't worry. Because of our time, because this is 7:02 already,
Yeah, yeah,
so we
yeah,
have spent 2 hours, you know.
yeah.
So probably
Mm.
next class, I will show us in other ways. You get
Okay,
right.
okay.
But
Thank you so
nevertheless,
much.
so do we get the gist for everything? Do you
Yes,
understand?
yes, it's very clear.
All right, makes sense. So we are getting
Thank
there,
you.
right? So so okay, so we are getting there, right? By next week, hopefully.